It was the kind of day that only comes once in a generation, a day that shook the financial world to its very core. A day that began in utter despair and ended with mind-blowing euphoria. The stock market, that mighty, unrelenting beast of capitalism, didn't just move, it went absolutely berserk. All because of one man. One platform. One message. When former President Donald J. Trump logged onto his favorite social media platform, Truth Social, and typed the words "be cool," followed by "this is a great time to buy," the world didn't just listen. It reacted with a force and fury that stunned even the most seasoned traders. Stocks surged like a dam had burst. Wall Street, which had been teetering on the edge of a catastrophic collapse, suddenly found itself in the middle of a stunning rally. It wasn't just surprising, it was historic. Let's put this into perspective. The Dow Jones Industrial Average didn't just climb, it catapulted, leaping over 2,300 points in a single afternoon. That's a 6.2% increase, folks, in one trading session. The S&P 500? It shot up a jaw-dropping 7%. The Nasdaq? A gravity-defying 8.5%. These are numbers that economists dream of. That textbooks document. That traders salivate over. And it all happened within the span of a few hours. This wasn't just a good day, it was a financial miracle, a resurrection from the abyss. And it was powered entirely by Trump's announcement of a 90-day pause on most reciprocal tariffs, with the exception of China. That single decision detonated a wave of optimism that roared through the markets like a tidal wave. But let's rewind for a second, because earlier that very same day, it looked like the global economy was about to fall off a cliff. China had announced its retaliation, an eye-watering 84% tariff on US goods. Europe had fired back too, imposing countermeasures on American steel and aluminum. The world was spinning into a trade war spiral, and fear hung in the air like smoke. The morning markets reflected that panic. Investors were pulling back. Money was fleeing to safe havens. Economists were muttering the dreaded R word, recession, and then, boom, Trump dropped his tariff pause announcement, and the mood shifted instantly. The surge wasn't just a blip. It was a full-blown frenzy. Tech stocks, those volatile, flashy darlings of the market, erupted with force. Apple, Nvidia, Tesla, each surged more than 6%. Investors piled in like it was a Black Friday sale. Bargain hunters saw opportunity in the chaos, and they pounced. It was the kind of day that turned paper losses into dreams of redemption. The bull was back, at least for now, and it was charging. Meanwhile, around the globe, the aftershocks were being felt in every direction. Japan's Nikkei index plummeted 4%, gripped by fear and uncertainty. South Korea's Kospi plunged into bear market territory, a brutal 20% drop from its peak. Taiwan's markets were sliding fast, and the Hang Seng in Hong Kong had just endured its worst one-day drop since the 1997 Asian financial crisis, a stunning 13% collapse. Only Shanghai stood out as an oddball, closing more than 1% higher in the middle of a global sell-off. Chaos was everywhere, and nobody was immune. In Europe, the picture wasn't much better. The continent's benchmark stock 600 fell by 3.5%. France's CAC index dropped 3.34%, Germany's DAX sank 3%, and London's FTSE 100 tumbled nearly 3%. This wasn't a market, this was a battlefield. And just as investors were bracing for the worst, that fateful Trump post shifted the winds. It was like a financial defibrillator shocking the heart of global capitalism back to life. But here's where things got really strange. Oil prices, which had already been dipping due to recession fears, collapsed even further. US crude fell to $57 a barrel. Brent crude, the global benchmark, briefly dropped below $60, both hitting their lowest levels since February 2021. Why? Because when the world fears a slowdown, fuel demand tanks. Fewer flights. Fewer trucks. Less shipping. It all translates to a lower appetite for oil, and prices dropped like a rock. Yet while oil fell, gold soared. Investors, always looking for shelter in a storm, poured into the precious metal. Gold spot prices surged 4% as people scrambled for safety. But the bond market? That's where things got downright spooky. Usually, in uncertain times, money flows into US Treasury bonds. But not this time. Treasury yields actually rose, which means people were selling bonds. That's not normal. That's not safe haven behavior. That's fear, the kind that whispers, maybe the US isn't as safe as we thought. Deutsche Bank analysts warned this could be a sign that global confidence in American assets is weakening. The unthinkable, suddenly thinkable. If foreign governments, who hold massive amounts of US debt, start selling their treasuries, America could face a borrowing crisis. And JP Morgan's Jamie Dimon echoed those concerns in his shareholder letter, warning that this trade war could shatter America's standing as the world's financial cornerstone. That's not hyperbole, that's DEFCON 2 level stuff for global markets. Then, there's the VIX, Wall Street's infamous fear gauge. On this wild Wednesday, it blew past 50. For context, that's a level we've only seen during two of the worst financial crises in recent history, the 2008 meltdown and the 2020 pandemic panic. The VIX doesn't lie, it reflects raw, unfiltered market anxiety. And it was screaming. Loud. CNN's Fear and Greed Index also painted a chilling picture, registering extreme fear as its needle ticked toward the danger zone. Investors were jumpy, hypersensitive, ready to run at the slightest hint of bad news. And that volatility? It cut both ways. Monday and Tuesday had been a blur of surges and slumps, thanks to leaks, rumors, and even some fake news about Trump's tariff plans. The bottom line is clear, the US and China are locked in a full-blown trade war, and there's no sign either side is ready to blink. In fact, the Trump administration went even further on Wednesday, doubling down on tariffs after China failed to meet a key deadline to remove its 34% retaliatory tariff. Now, all Chinese goods entering the US are hit with at least a 104% tariff. Let that number sink in, 104%. That's not just protectionism. That's economic carpet bombing. And it gets worse. Countries that were supposedly exempt from the reciprocal tariffs? Not anymore. A universal 10% tariff has been slapped on everyone. No exceptions. It's the equivalent of lighting a match in a room full of gasoline and walking away. So where do we go from here? Will Trump's tariff pause bring temporary calm or spark even more volatility? Will China back down or escalate further? Will the global economy manage to weather the storm or spiral into a recession that echoes the darkest chapters of history? One thing is for sure, we are living through a financial era unlike any other. Tweets move markets. Headlines ignite sell-offs. And one person's social media post can lift or crush the hopes of billions in the blink of an eye. This is not just economics. This is drama. Suspense. Power. Politics. It's the real-world version of a Hollywood blockbuster, and the stakes are as real as it gets. If you want to stay ahead of the chaos, understand what's at play, and brace yourself for what's coming next, you better keep watching. As the world watches nervously, the big question remains, can the global economy withstand this level of instability, or are we on the brink of another financial meltdown? With no clear resolution in sight, investors are left to navigate a market that feels more like a minefield than a place to grow wealth. The days ahead will be critical in determining whether this is just a temporary storm or the start of something far more dangerous. One thing is certain, in this environment, only the bold, or the reckless, will dare to make big moves.